Hey everyone, this is Richard from TraderLion.com, and today we're going to be talking about the S in CANSLIM, which stands for supply and demand. And CANSLIM is a growth stock trading methodology developed by William O'Neill, the founder of Investors Business Daily, with each of these letters standing in for a different important characteristic that he found the greatest winning stocks of all time going back to the 1800s share before and during their large price moves. So today our focus is on supply and demand. And let's start things off by talking about what William O'Neill actually said about the S in CANSLIM. And number one, he said that any size capitalization can be bought using the CANSLIM system, but small cap stocks will be a little bit more volatile. And from time to time, the market shifts emphasis from small back to large caps. Companies buying back their stock in the open market and showing stock ownership by management are preferred. And the reason that companies buying back their stock in the open market is bullish is because that limits the supply available to trade. And so the same amount of demand can increase the stock's price. And we'll get to that in more detail in a future slide. And the second part of this, showing stock ownership by management, those are preferred because it basically means that they have skin in the game and are more likely to work harder to benefit their shareholders because their own money is on the line. And number two here, O'Neill says, when a stock pulls back in price, you typically want to see volume dry up at some point, indicating there's no further selling pressure. When a stock rallies in price, in most situations, you want to see volume rise, which usually represents buying by institutions, not the public. And number three, he says, when a stock breaks out of a price consolidation area, trading volume should jump 40 to 50% above normal. In many cases, it will be 100% or more that day, indicating solid buying and likely further price increases. Using daily, weekly, and monthly charts helps you analyze and interpret a stock's price and volume action. And going along with this, you should analyze a stock's base pattern week by week, beginning with the first week a stock closes down in a new base, and continuing each week until the current week where you think it may break out of the base. You judge how much price progress up or down the stock made each week and whether it was on increased or decreased volume from the prior week. You also note where the stock closed within the price spread of each week's high and low. And we'll go through a few different examples at the end of this video so you can really kind of see this in practice. And moving on, we've got the stock structure, which I think is very important when it comes to understanding the supply and demand characteristics, because in reality, this is what sets the supply available to be traded on the open market. And starting things off, we've got outstanding shares, which is the total number of shares in existence of the company, but not all these are available to be traded because you've got restricted shares, treasury shares, and closely held shares. And all the total shares here make up the outstanding shares. Up here, we've got the shares in the float, which are those shares available to be traded in the open market. And overall, this is what's important to remember, and it's also represented in this graphic. A lower float means the wider the spreads between the bid and the ask, and less liquidity overall, which means the stock can move faster, both upwards and downwards. So overall, this is what sets the supply available to be traded, and then demand comes in and sets the price and finds this equilibrium point. And you can see here, price is set by the current supply available and the existing demand. And then down here, supply is set by the current number of shares in float and the balance between the buying pressure and the selling pressure to find and set this equilibrium price, which then becomes the price that you see on the stock charts oscillating back and forth. And what's important to remember here is that we can use charts to look for accumulation signs by large institutions who are long-term holders. And this is important here because these institutions will absorb that supply, gradually amass their positions, and basically that means that there's less supply available for other participants, which means increased demand can rapidly increase the stock's price, which is when we want to get involved in the stock. And in terms of these accumulation signs, the first thing you want to do is follow the big volume. Large players show up in charts during high volume days. They can't hide their footprints. And this is because they're not going out and buying 10, 100, even 1,000 shares. They're amassing very large positions of hundreds of thousands, even millions of shares that they want to hold for the long term. So that type of buying really shows up significantly on these charts on these high volume days, as you can see down here. Now, what does kind of big volume mean and what does above average mean? Well, I think there's kind of two main ways to look for above average volume. And the first is pocket pivots. And a pocket pivot is basically a day that either is up or has a strong closing range between its high and low, and volume is greater than any down volume of the past 10 days. So that's kind of a subtle accumulation sign, and that's one of the ways that I like to look for big volume on the charts. And another way to define big volume is basically, is the volume above a volume moving average, such as the 50-day moving average or the 20-day moving average. This is another indication that volume on that particular day or week is significant and should be paid attention to. You should also be watching the trend of the moving averages, because an increase in the moving average basically indicates to me that more institutions are getting involved in trading because they're whipping around larger blocks of shares. You should also be watching out for huge volume on base breakouts and earnings gap ups. Basically, that indicates that institutions are involved in that breakout, and that the trend is going to continue because they can't buy all their position here, because remember, they're buying not just 10, 100 shares, they're buying thousands of shares, tens of thousands of shares, and they can't accumulate all those shares just in one day without dramatically increasing the stock's price. So once a breakout like this occurs, they're slowly adding to their position on dips and pullbacks, and accumulating that position and building it up over time until they're satisfied with their current amount invested in that particular company. And in addition to following the big volume, you also want to be on the lookout for low volume, which is also significant. And for instance, on pullbacks, you want to be looking for low relative volume to the prior uptrend, which indicates to me that the big money is not selling yet. And this is because if a stock moves up on high volume, then drifts back into moving averages on relatively low volume, institutions likely are not selling their stock that they just bought in that prior uptrend. Instead, they're holding on to their shares and waiting for that support level to be reached where they can support the stock and then push it back up and restart the uptrend. So make sure that pullbacks are on low relative volume, which is actually very healthy during an uptrend. And in addition to pullbacks, you also want to be watching for tight areas on light volume, which indicates subtle accumulation. And for instance, we've got a chart of NEO here, which often during its very strong run in 2020 went very tight with very low volume as well. You can see it's below this moving average here. And this indicates to me that institutions are absorbing any supply that's coming to market, and gradually during this consolidation, supply is getting less and less, which when demand comes in, you can see from this huge volume, pushes up the stock's price because there's less supply coming to market. So before breakouts and during price consolidations, you want to be on the lookout for these tight areas on light volume, indicating accumulation by institutions. And going through a few examples of weekly charts, we've got Snap here to start things off. And what I wanted to focus on here is within this price base in August of 2020, look at how it had 3 weeks tight at the bottom of the base with very tight ranges as well. This is a clear sign of institutional accumulation. And then we've got a move up the right side here on a higher volume than these previous 2 weeks. And then ultimately a very strong breakout on earnings with a bunch of institutions jumping in. And then of course a further uptrend, and then another base recently after the growth correction. And moving on to the next example, we've got DocuSign. And there's a few interesting things here on the weekly charts. First of all, this was during the March 2020 correction. You can see that from the gray SPX line. And here is the base that was formed during that correction. The first interesting thing to note here is the strong closing ranges on this week and this week, while the SPX is completely falling apart. And this to me indicates institutional support, and a closing range of greater than 40% during a correction is a sign of institutional accumulation. And this accumulation means there's less supply available to the market, which means when the overall market turns around and people become interested in the stock once again, it can really take off as it did in 2020. And the other really interesting thing here is when the market bottomed and DocuSign just started moving up from its base, it was already making relative strength new highs before new price, which once again indicates that this could be a big leader during the next uptrend. And moving on, we've got a more recent example in SQ. And once again, I want to point out the strong closing range on this week right here. Even though it was a down week, it finished well off the lows. Then we have a nice inside week on lower volume, a move up and down on lower volume again, 2 consolidation weeks, and then a strong move up through this pivot on high volume. and then a subtle kind of follow through here this week so far. Potentially it forms out a handle, maybe an inside week next week, but then potentially it could challenge the standard base pivot. And lastly, I want to finish things off with an example of a weekly chart of a stock that's not under accumulation at this point and isn't yet showing signs of a bottoming pattern and then potentially a new uptrend. And we've got skills here, and during this uptrend, it definitely showed a lot of signs of accumulation, a nice volume on these up weeks, good tails, strong closing ranges, and a very strong week here, which so far is the intermediate top. And the week after that, it was on lower volume. That's constructive. It was a nice inside week, but unfortunately it did have a pretty poor closing range. So the expectation maybe would be a continued move down. The next week we had a gap up, but then it closed below this low as well. Then a continued move down well off the highs. So a little bit of accumulation here, but once again, an expectation breaker, a move up, and then a move all the way back down, taking out these lows. Then this week potentially was a turnaround. You've got an undercut of the prior low, a strong move up, a close right near the top of the range on higher volume. But the next week, once again, like this week right here, we have an expectation breaker where we moved up and then have a pretty poor close and then fall through to the downside and keep following through to the downside until the current week. So at this moment, Skills is not showing any signs of an intermediate bottom. It still needs to kind of round out here, have some strong closing ranges, move up on volume, and then potentially start the next uptrend and a move up towards this intermediate high. So in summary, supply and demand is a very important aspect of trading. We have to be able to look at charts and assess it correctly. And it's important to keep in mind that the stock structure affects liquidity and how fast a stock can move to the upside or the downside. Price and volume analysis allows us to assess supply and demand and identify whether conditions are favorable for us to be involved. And finally, we want to follow the big volume and also pay special attention to low volume during tight price areas and constructive basis. So I hope you guys enjoyed the video. If you did, please go ahead and leave a like down below and subscribe to the TraderLion channel. And I'll see you guys in future videos.